Hey, my name's James Wilkinson and welcome to my YouTube channel. Now in this video, I'm going to talk about, is property investing still something that's worth doing? With all the doom and gloom that we've seen in the market, with interest rates going up, with house prices going down, with all the uncertainty, is it still a smart thing to do as being a property investor? Well, this video has got that question answered for you. So while you're here, take that finger of power, smash that like button over there, guys. Go on, smash that like button very quickly. That helps me massively with the YouTube gods. And while you're here as well, smash the subscribe button and hit the bell notification. We're on our way to 5,000 subscribers. Can we hit that in April? We need 500 more of you beautiful people. So smash the subscribe button, hit the bell, take a look at the subscriber count and see how close you got us to that number. So property investing, well, that's something that I like to do, and that's why we have this channel. So we've been building a portfolio for my two daughters. You can check out the older videos and see tours of properties that we've been doing. We're looking for new deals at the moment. And is it something that you should carry on doing? Because look, there is a lot of uncertainty. We had the mini budget last year where interest rates were expected to go all the way up to 6.5%. The base rate has gone up 11 times in a row, and we're now at 4.25% as a base rate. House prices have been dropping at the end of last year. This year they're flat. So what should we be looking at doing as property investors? Well, I want to look through some deals here and see if the numbers stack up and if I would invest in those and if you might look at those too. So where we're going to look is Doncaster, right? And so I've had a look through. If you look on Rightmove and you clear out, I would put the price on Rightmove from around 40,000. If you put less than that, it's just going to be a load of auction properties. Now, they might have attractive starting bids, but for this one, I just want to talk about a vanilla buy to let. So I had a look and there are tons of properties in the 50 to 60,000 pound range. That's 2 to 3 bedroom houses, dependent on the area. Now, of course, whenever you're looking for a property, you've got to do your due diligence. You've got to go and look at the property, ask the agent what the areas are like. There are nice areas of Doncaster and there are rough areas of Doncaster. And so you want to make sure you get that in a good area. So we can see properties there between 50 and 60,000 pounds. Go and check on Rightmove, you can see that too. So let's just say we go for the upper end, £60,000. Now that means that we need to put some money into that deal. How much do we need to put in? Well, we need to put in around £15,000 as our deposit, and our mortgage on that property will literally only be 45 grand. Perfect. So then you can jump over to Money Supermarket, right? So Money Supermarket is a comparison site, or you can use Compare the Meerkat, or wherever you want to use. This is just for an example. I actually recommend when you go for a mortgage, you use a broker, because the broker is the one pulling the strings and getting the deal over the line. I think for a few £100 that you pay them, it's way worth it. It's probably the best investment that you get as a property investor to use a broker. So we found a 60 grand house. We've offered on that. We didn't get any deals. We just took it at the 60 grand that it's at. We needed to stamp up a 15 grand deposit. We need to get stamp duties and legal. They're not going to be much, a couple of grand. So we'll just assume they're not in this for now. Or actually, let's chuck them in. So let's just say they're 80. So a total, we'll put 3 grand on top of that. So we're 18K into this deal. Great. So looking at those properties at the 50 to 60 grand range, if you buy right, there are some where you won't need to really do any work to get it to a rentable standard. And you might just need a lick of paint, but you could probably do that for a few £100 or just your own time and labour. It's not really going to cost you much to get these properties back ready to rental standard in that area. So let's just say, for argument's sake, just to make this easy, this example, we've got into this deal for £18,000. That's not unrealistic. You could actually get into this deal for less if you did a refurbishment and bought at auction. You might buy for 30 grand there. But let's just say we're buying through an agent and we're in the deal for £18,000 now. Great. Now, let's talk rent. Now, rental on these properties, you can get between 600 and 650 per month at the moment in the Doncaster area. Go and have a look on Rightmove again. Yes, you'll find some that you'll get for 450. You'll find some for 850. But majority of properties, mine went for 575 in a day, literally in hours. We had someone 4 hours, I think it was before it was gone. We're just about to do the renewal now, and it's going to be 625, right? So 625 is not unrealistic. And we actually did buy that house for 60 grand and did it up. So let's just say we're going to get the middle rent of 625. That's our rent. Now, we need to pay a mortgage, don't we? So the mortgage on this property is going to be, where is my tab? Here we go. So if you borrow £60,000 on an interest-only basis, which is what you would likely do here, you would be borrowing the property's worth 60,000, you're borrowing 45,000 on an interest-only basis. The Mortgage Works have a deal which is below base rate. This is just for 1 year. And you know what? In this market, I would take that deal right now because it's expected that rates will probably come down later in the year or next year. So I would bank on that one. But you want to be careful and cautious with the risk that you're comfortable with, right? So you need to do your own due diligence. So there's a 2-year fix for 153. But let's just say in the middle, let's just say our mortgage is 150. So we can get a 2-year fixed or a 1-year fixed. 146 for a 1-year deal, 153 for a 2-year deal. So let's just say our mortgage is 150. We're rounding the numbers here. So let's have a look. That means that we're making a fairly decent profit, gross profit there. So let's now get the 12-year numbers, 12-month numbers on this one. So this is how bad you see, you don't have to be particularly smart to be a property investor. I need a calculator to work out these simple figures, guys. I'm sure some of you will be loving that one in the comments. Okay, so the yearly mortgage on this one is 1,800. 625 times 12. 7,500 gross for the year. So annual profit is going to be around 5,700 before estate agent fees, before voids, before maintenance and stuff like that. So let's just knock off. How much should we knock off? Should we knock off? Let's say we knock off £1,700 for all of our fees for the year, giving us a £4,000 profit. That is not unrealistic. That 1,700 quid to pay for your agencies, your insurance, all of that stuff in a year is very, very reasonable amount. So let's say we're making £4,000 profit on this deal. Now, we got into the deal with £18,000. That's our cost. And so that gives us every year on an annual basis 22% return on the capital employed. Now that is a very good return on investment. You're never going to get that in a bank, anywhere close to that. You're not going to get that reliably with cryptocurrency. Stocks and shares go up on average 10% a month. This deal here, the prices of the house could go up, they could go down, but that doesn't really matter to us as property investors because right now we're looking for cash flow. And over time, yes, that 60 grand house, you know what? The market could crash massively next year. That 60 grand house is now worth 50. The rent we're kicking out is still going to be very, very similar amount. So it's not really going to impact us in a big way. Now, the only consideration that we might want to have is if the market was going to go down, then we might want to have a longer mortgage, because if we did a year mortgage and then we refinanced in a year and the market's dropped, we might have to top our deposit up a little bit. That's something to consider there. But you know what? If we put 18 grand into something and it kicks us out £4,000 in a year, and on the whole, Doncaster has good capital appreciation at the moment, and there's a lot of investment going in there now, particularly with the work from home scenario. People are moving from the south to the north. Doncaster has got city status. I think this is a pretty good deal. And so this is in a down market with high interest rates. You can still get those kind of deals. Now, you can't get that deal in the south. That isn't going to work anywhere near that kind of return in the south. You'd be lucky to get, well, we were looking at some the other day where you would get 2% or 3% return on your investment. Then if the prices do go down, you're really, really going to be in trouble here. So with property investment, it's all about buying and holding. Staying in the market for the long run is where you're going to make money in property. So we have a portfolio ourselves where up north we're investing for cash flow like this. Down south we're investing for capital appreciation. And those two things combined mean that we can release equity from our southern properties and we can invest in our northern properties to get more cash flow. Now, our northern properties do go up in value, as do our properties in Hastings, which is a bit more of a quiet area than where the bulk of my stock is in Surrey. Hastings is kind of like my middle ground as well. And we're going to be looking at Birmingham as well later this year for other areas to invest in. So investing in property, it is still a good investment. You need to know what you're doing. You need to really be cautious. You need to have a power team. You need to speak to brokers and all these people that can support you. But that money is going to appreciate quite well, whereas sitting in the bank, not so well. Let me know your thoughts on this. Do you think property investing is a good thing still? Comment below, keep it kind, smash the like button, do subscribe to the channel, hit the bell notification. And if you want to know an easier way to buy a house, where you can buy a house for £1, go and watch this video right here.